Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 4th of September, 2015, and we've got a long weekend coming up here. I think everyone could probably use it at this point with all the volatility we've seen. A little bit of extra rest is a good thing here. As we started out September on a negative note, the S&P 500 this week was down 3.3%, and the Nasdaq lost 3.25%, etc. We did have a little bit of continued rebound in oil. The utilities had I'm sorry, not the utilities, but the financials were down 4%, as were the biotechs. And we continue to be in a very volatile environment here. And what we saw this week was a rally back up again towards the 5-day. I'm sorry, towards the prior band of support that we had seen in here. And this band of support has been offering resistance. So we saw it last week, and then again this week on Thursday as we rallied up towards the low end of that band of resistance. So this continues to be an important level as far as potential resistance goes going forward. And when we look at a 10-minute time frame on an intraday chart, what we see here is I've got a 5-day moving average, and that's clearly trending lower still. And then this gold dotted moving average is the volume weighted average price. And what I've done is just taken a measurement or measured it from the Monday of August 24th, when we basically had, what people are calling the crash or whatever you want to call it there. But from that day moving forward, the volume weighted average price, the average price that this S&P 500 has traded at in that time, is right up here at about 194. And I said earlier in the week that I thought this would be a pivotal level to monitor to see who's gaining or losing control here. And it tells us still that we're seeing a real big battle near this level, and that going into the long weekend, that the sellers maintained control as we closed for the week below that. Now, the weekly volume weighted average price over the last 5 days was right here at about 194.5. So clearly, there's still sellers in this market. You can think it's down too much or whatever you want, but the fact remains we've got downward pressure on the market, and we have just even over the last week and a half lower high. And right now in this little area, this has become a little bit of support in here recently, but it's below a declining 5-day moving average, and these levels typically do not hold. So, the sideways consolidations tend to resolve themselves in the direction of the primary trend, and the primary trend is clearly still lower. The broken weekly chart tells us that, and the daily time frame with us below all of these declining moving averages tells us that as well. So it does not look to me like we are out of the woods, and I think we still have to go into next week with a very strong defense because, again, we're below a declining 5-day moving average and the volume weighted average price since the event, that is, since this gap lower on that day. So let's take a look at the Nasdaq, which was down 1.25 today, and again for the week we lost ground. We lost what did we lose here in the Nasdaq? We lost 3.25% in the Nasdaq this week. So we have the same thing. We've got this market below declining 5-day moving average. When we look at since the event, we're kind of right on that level as well. So basically from this low and where we saw the volume, we can kind of open this up a little bit to get some better scaling and see that, here's our near-term level of support. I wouldn't expect this would hold, but if it does, then we're starting to turn a little bit more neutral. But breaking below this level next week should lead to further decline. And for the S&P 500, kind of the similar type of thing, basically between 191 and 192.25. I would not expect that little band of support would hold. And that's primarily based on the fact that we're below a declining 5-day moving average, and we are, of course, on the daily time frame finding resistance at a prior important level of support, and we've got a declining 10, 20, 50, 100, 150, and 200-day moving average. 200 maybe a little bit flattened out, but still, we've got this prior support in here holding as resistance, and downtrends are defined by lower highs and lower lows, and the buyers are not gaining back control since the event. Now, in the Russell 2000, we've kind of got the same thing here. We're right at the volume weighted average price since the event, and on a 30-minute time frame, we see here as well that we've got these prior levels of temporary support in here acting as resistance, a lower high this week, and this little band of support in here between basically 111.90 and 112 and a quarter. We break that, I think we're going to see another lower low, and that's the trend here. So there's no reason to think that it might not happen. Now, one scenario is maybe we dip briefly below that and then have a pretty good little rally, but it would be a short-lived rally and not something to trust, because we do have this market in a primary downtrend. We're broken below the bigger level of support, which had held throughout the year until a couple weeks ago, and we've got lower highs and lower lows. So no reason to think that this market is going to turn around anytime quickly. Semiconductors got up to this prior little band of support, very close to it, and they backed off as well. We've got this group holding on a little bit better in terms of relative strength, but still the semiconductors, only down 1.7%, sure isn't making money. So focus on making money, not doing better than the losing market. So the semiconductors, again, showing a little bit of relative strength, and ideally in here, if this group is going to start to heal a little bit more, it would hold this 48 level. But again, with such a strong downtrend, I wouldn't think that that's likely to hold. I mean, again, why would we expect it to hold? It's just it's no different than when we're in an uptrend that we don't expect the pullbacks to end the primary move until we break major levels of support, and then we see declining moving averages. When we have declining longer term moving averages, it tells us the longer term time frame is guilty until proven innocent, and there's no reason to think that this is going to make some kind of miraculous turnaround. We'd seen it, people, basically the gold bugs, I guess, we could see, that for years they've been looking for the bottom in the gold market, and look how long it's taken for this market to still it's still in a downtrend. It's up at prior support, which is becoming resistance in here at about this 112-ish level. So, if they don't scare you out on the way down, they'll typically wear you out, because the recoveries don't come very quickly typically. And we have to go with what's typically, not what's unusual. We have to plan for what's typical and be prepared for anything else, and have our plan and stick to it. The biotechs came up to a prior important band of support, and that support has found a level, some sellers in here that acted as resistance this past week. Now for next week, we've obviously got this little level that's held as support for the last 4 days, and here's the volume weighted average price for this week. And right now, this is the clear level, 332 to 334. That has been where some buyers showed up this week, and again this morning. But since the August 24th pullback, we see that we're right at the volume weighted average price since that event. We're below a declining 5-day moving average. We had a lower high this week, and we have more repeated tests of support. More often that support is tested, the more likely it is to fail, and the sellers are showing us they're getting more aggressive price-wise. So just for neutrality, we'd need to see this back above 342-ish or so. So we have to look at it going into next week as most likely to continue lower. It's guilty till proven innocent in the downtrend. Oil did stage some further strength this week. If we take a look at the May high and then go straight down, you can see that high was 62 and change down to 37 and change. And these are Fibonacci levels, just retracement levels. So 38.2% retracement right in here, and a 50% retracement. Realistically, you've got to look at oil as still broken. It's maybe trying to start to stabilize, but I find it unlikely that it will continue to just ramp higher here. So just a look at oil well, I think that there's going to be, similar volatility to what we're seeing in the overall market as well. The bonds are continue, they continue to kind of be a mess. They got up to this prior prior support, which became resistance, and then broke through it. And that was the, so-called flight to safety on the event 9 days or 10 days ago, on August 24th. But since that time, bonds have been sold off as well. They are still below the declining volume weighted average price since that event. So you have to look at bonds as they're selling off since that event. They came down to the 50-day moving average, and maybe they're starting to stabilize a little bit. As you can see, this trend line from earlier in the year is, off the peaks, is maybe starting to show that, we've got this prior resistance holding support and this 50-day moving average in here. So maybe bonds are starting to settle down and work off this downtrend that they've been in for most of the year. As far as other markets go, I mean, Apple still is a mess, as I pointed out earlier in the week, that they are still below the volume weighted average price since the event being the earnings over here, of course. And you can see we got stuck below that. Here's where that volume weighted average price is at 114.5-ish, meaning that since the stock reported earnings, the average price it has traded at, since the company reported, the average price their stock has traded at is about 114.5, meaning that on average, most people at this point are down $4.50 in shares of Apple. So we've got this downtrend line that was briefly broken, but again, with these declining moving averages, shares of Apple remain guilty till proven innocent. Since the event, the low on August 24th, we have the volume weighted average price in here, and I think that you take out this week's lows and stay below that volume weighted average price since the event, that it's likely Apple will continue to move lower. Hope everybody has a good long weekend. Again, everyone probably needs it, and I will talk to you next week. Thanks.